Maverick. Noun, unusual person. A visionary, leader, go-getter, an independent thinker. They see the vision for their life and pull that future towards them with an unyielding belief that things can and must be better. They achieve what most won't. Innovative, influential, daring, and direct, with a remarkably high tolerance for taking calculated risk. A foe to the status quo. This is Passive Real Estate Investing with Mavericks. Your host, Neil Timmins, has been involved with over $300 million in real estate transactions. He's a published author, commercial property investor, and real estate syndicator. This show is for those who want to learn how to earn passive income through real estate investing. Now, here's your host, Neil Timmins.
Welcome to Passive Real Estate Investing with Mavericks, where we provide actionable steps to grow your passive income and become job optional. During this episode, you're going to discover how to build the lifestyle you want through real estate. For those of you who are new, I'm your host, Neil Timmins, and I love passive income from real estate. Before I introduce you to today's Maverick, I want to make a request that at any point you like what you hear, give us a thumbs up or subscribe to make sure you never miss an episode. And if you love what you hear, please give us a written review. Plus, be sure to take a look at today's description of the episode as we packed it with thousands of dollars in free resources. So today, we've got the privilege to learn from a person who's a multifamily syndicator. Prior to her career in real estate, she was in the construction business and still is with her husband. But all that changed when they decided to deep dive and take their first leap and buy their first single family home. That's where the journey began. I would describe today's Maverick as someone who's passionate about creative passive income in today's environment. Today's Maverick, I've got Beth Underhill with me. Beth, how are you?
I'm doing well, thanks.
Good. I'm excited you're here.
I'm excited that I'm here too.
For the audience's sake, tell me, audience's sake, who are you? Where are you from? What do you do?
Sure. Let's see. Beth Underhill, 54 years old, happily married for 23 years, have a daughter, freshman year at the University of Kentucky, 4 dogs. I live in Cincinnati, Ohio, and I am a full-time real estate investor.
Yeah, cool. Tell me about this. Tell me, the very first deal you bought. What was it? What was it like? How'd you get into it?
So the very first deal with respect to real estate actually was back in 2004 when my husband and I purchased a piece of property for our construction business. And we had some pretty big visions as far as what we wanted to do with this property. It had a building on it, which we knew we could house our construction company with, or underneath, I should say. But it also had a couple of other smaller buildings that we thought, hey, we can rent this out, generate income, and actually pay for the mortgage. However, it was very short-lived because when the crash happened, it just really killed our business at the time. A lot of a lot of our clientele pulled back in terms of outdoor living space contracts, and everybody was, obviously watching their dollars, and they weren't sure what was going to happen with the economy. So we had to pivot, regroup, and we ended up having to sell the property. So, yeah, that was our first experience with real estate.
Tell me about Yeah, go ahead.
I was going to say, then we took a break until my husband decided one evening at 2:00 in the morning when he was watching an infomercial, he decided that we should attend a fix and flip workshop and start flipping houses. So that's how we got back into it.
That's how you catapulted you back into it. Tell me about the most recent deal you did.
The most recent deal, well, there were 2, and they were kind of simultaneous. One was closing on 126-bed student housing property in Milledgeville, Georgia, and the other one is an Airbnb arbitrage, and they happened like right around the same month.
Tell me about the 126 student housing piece.
Sure,
how'd you find it? How'd you fund it? What was the whole story? How did it all come together?
Absolutely. So there is a group that I am part of, MTN Investment Group, and we look for, generally speaking, Class A properties. The student housing, this particular one, the student housing property, came to us through actually one of our partners who used to be with Landmark, which is one of the largest student housing property management companies in the country. And so through his pipeline, through his network and so forth, we were introduced to this particular property. It's a Class A property. The developer he kind of ran his cycle as far as developing the property, operating it, and then looking to sell it. And that's typically what you see with developers. They want to, lease it up, get it to a point, and then they move on from it. So we came in and were able to grab this property 100% leased for the current school year, 22-23. We are 100% pre-leased for next year, 23-24.
Wow.
This is an absolutely gorgeous property. What we love about it, it's in Milledgeville, Georgia, right? So you wouldn't necessarily hear about it. It services Georgia College, State University, and a military college. But what's unique about it is there's not a lot of actual housing on campus. And this is so close to campus that you can just literally walk across the street and then you're on campus. So we tend to, with this property, we get a lot of sororities. And so, they live there. And then after, they're moving on their senior year and so forth, like the sisters who are coming through the sorority that are freshman, sophomore and whatnot. So it's sort of like this nice cycle. And we are just absolutely tickled to have this property. It's definitely one we're going to hang on to for a while. I mean, cash flowing from day one, you can't really argue about something like that.
How did the debt and equity come together on that one?
We actually assumed the loan. So that was obviously very helpful. We did have, as far as the equity was concerned, we did have a private equity group come in with half of the money, and then we raised the rest of it.
Got it. In between your first deal and the one you just described, there's a big difference there, and obviously a huge journey along the way. What were the biggest lessons that you learned along that path?
Probably the biggest one is you need a good team. You need partnerships. You need to have people that, have the wide variety of experience. Like my husband and I, when we first purchased that property back in the early 2000s, we knew enough to be dangerous, but we didn't know everything. And had we known a few other key pieces, we either A, would not have purchased that property, or B, we just would have set ourselves up differently. With this particular deal, this was like a big learning curve with this 126 bed student housing for me, because it was my first syndication. So I'd never been involved in a syndication. So watching it from start to finish, and my role ended up actually handling all of the investors, their subscription agreements and so forth. So I learned so much, but what I saw is that when you're doing something of that magnitude, there's just no way that one or even two people could do it on their own. It was a team effort between the lawyers, between the title company, ourselves, even the partnership that you create with the seller, because you're in partnership with them trying to get this done, and you have to build that level of trust. And they have to trust you that you're going to get this to the finish line. And there were a couple of times when the seller was like, "Hey, are you guys really able to come through?" And we were sweating bullets, on numerous occasions. Are we going to be able to raise all this capital? And when you're heading into, months like November and December, which we ended up closing towards the latter part of December, those are tough months to raising capital. And also you had a lot of uncertainty. The uncertainty was starting to sort of bubble up with respect to the market and what was going on with it. And just, talking to potential investors like, hey, this is a good deal. Like, you are going to receive a distribution check after the first quarter, because this is already cash flowing. We are 100% pre-leased. I mean, there were so many positives going for it. You would have thought it would have been a little bit of an easier sell, but I think it was just sort of a function of what was going on in the real world.
When you go and evaluate opportunities today, what makes an opportunity a deal for you guys when you take something down?
Right now, I'll be honest with you, we are looking at properties that are cash flowing. We are not looking at anything in which there is a heavy lift anything that has significant value add right now, we want cash flowing from day one. So for instance, we have another student housing property that's under contract. It's in Murfreesboro, which is just outside of Nashville. And same thing with this one. It's 98% leased for the current school year. And right now we are pre-leased at close to 93%. So, and we've been able to, the owner has actually been raising the rents for all the pre-leases. He's been, going. And this was going to be sort of our business model. So again, we're going to walk into another situation where we will probably end up with something close to 98% lease, and it'll be cash flowing again from day one for us. And that's really important right now for our investors, and to be able to instill in them the confidence that they're not going to be waiting 2 years or possibly, I'm in another deal, by the way, that I actually raised some capital for it, and they have a capital call already happening a year into that particular deal. And that's not what we want to have happen with any of our investors right now.
Yeah, good. I'm going to go down the capital call path in just a second, but tell me, relative to when you're looking at something, you want something that's cash flowing, how are you borrowing? How far are you projecting or locking your interest rates out to create some stability in your cash flow projections?
Well, I'll tell you what's happening with us right now. We are assuming another loan.
Oh, wow. Yeah.
And that loan, again, very low interest rate, somewhere in the fours, and locked in until 2029. So again, another very attractive deal. Same thing with, we have a third property that we haven't talked too much about this particular property. As far as us as a group, we haven't talked to a lot of investors about it. But this one is actually in Athens, Georgia. Awesome market, right? University of Georgia. And this particular one, it's a situation where there's a partnership, and two of the partners want to get out of the partnership. So we're going to come in and actually make for that other partner, so to speak, but we're going to step again into the current debt and just continue to take on from there. So
yeah, well, you can assume those. It's night and day difference compared to what it would look like if you had to go out and borrow at today's prevailing rates.
Absolutely.
All right, you mentioned capital call. Maybe for the listeners, what is a capital call? And then maybe give us a scenario, and oftentimes it happens when somebody doesn't execute on a plan. Maybe give us a little color to that story about what transpired to actually end up in a capital call situation.
Sure. So a capital call is essentially where you're going back to your investors and you're asking them to put additional monies into the property, into the deal, so that if it's covering debt, if it's because maybe something went awry with the business plan, whatever the case may be, the property's not producing enough cash flow to be able to kind of deal with some of the nuances that might be coming their way. And so having more capital put in by the investors is what's called a capital call. Now, a lot of it, it's not something you ideally want to do, because your investors start to lose faith in who you are as an operator and what's going on with it. I'm sort of on the outside of it. So as far as knowing all the nuances, from my understanding, though, a lot of it has to do with really it's the business plan. My personal opinion, I feel like some people didn't do their homework on the property itself to know that there were enough individuals who weren't paying rent. And by the time we took over, a lot of people had to be kicked out of the property. And so that really hurt from a leasing perspective. And then trying to get people back into the property after that, that's where the struggle has been. So, I think the last update I received, occupancy is somewhere like in the high 60s, low 70s, which is not optimal. Right. You want to be obviously in the 90s, if at all possible. And that's where you want to be in order to continue out doing whatever business plan you want to do. And this just isn't performing. So I think the goal is I know they talked about a refinance. We'll see what happens there. But obviously I think they're going to want to unload this property as soon as possible.
Sure.
So, yeah.
Tell me, when in your deals, when you syndicate, bring investors in, tell me about your communication plan. How do you keep folks informed through the entire life cycle of an investment?
Sure. It starts at the beginning and it keeps going. If you have bad news to deliver, the sooner you deliver bad news, the better off you are. You want to be as transparent as possible. I know for me, with having this first syndication and having to communicate with investors, I was on them all the time, talking and doing ton of different things, and just making sure that they were just really kept abreast of timing. Continually asking, hey, are we closing today? Are we closing tomorrow? What's going on with this? What's going on with that? So constant communication. And whenever you have updates, even if it's a good update, like, hey, I know we updated all of our investors as soon as we found out that the following year was going to be 100% pre-leased. We want to tell them good news. We want to let them know what's going on. The more that they feel like they're part of the project, the property, the deal, what's going on with it, all the good news, the better off. Now, I did have to deliver bad news that their K-1s were not going to be to them in time in order to file their tax returns by April 18th. And that was met with, obviously some disappointment. But given the fact that we took this property on so late in the year, it was a bit easier to explain that there were just a lot of things that we still had to get through in this first quarter to make this happen. And everybody was pretty understanding. But to me, transparency is number one. And if you are letting your investors know upfront, and that was the interesting thing and I'm going to go back real quick to this capital call, because all of the investors had received in 1 month, I think it was October of last year, that, hey, good news, we're on a good path, this is happening, that's happening. And then by November, that's when they announced the capital call. So it was a bit of a shock to all of the investors. Like, wait a minute, 1 month you're telling us this, the next month you're saying something completely different. That's not, I wouldn't advise something like that. If you're starting to see something on the horizon, it's probably better to let those investors know sooner rather than later, as opposed to delivering good news 1 month and then dropping a bomb the next. So,
yeah, that sounds like the pendulum swung pretty hard.
Mm-hmm. It did.
When investors are looking at a particular operator or syndicator, what should they be looking for in that person?
It's funny because you can go on social media at any given time, Facebook, LinkedIn, whatever the case may be. And there's operators who are doing a very good job of marketing themselves. And so, you're led to almost think like, wow, they're doing all these deals. They're closing on this deal. They're closing on that deal. Like, they must really know what they're doing. You might get to their website and they've got all the sparkle and pizzazz and everything looks like roses. However, if there's one thing that I have found is you want to really find out how many deals has an operator cycled through and what has that looked like? Can I talk to any of those investors who've been part of those deals? And what was their experience? What was the communication like? How did the returns come out? What did the business plan go exactly as was promised? The more I can see what an operator has done in the past versus what they're currently doing and making it look like, the smoke and mirrors right now, the more confident I'm going to feel in that particular operator.
So say somebody finds a particular operator, they get excited, they're confident in them, and now they get presented with an opportunity. What should they be looking for inside that opportunity? Maybe what questions should they be asking about that opportunity?
Sure. I think understanding the debt and equity is obviously key. Understanding the business plan, how the investor is going to get paid back. What's it going to look like? What's year one going to look like from a distribution standpoint? What's year two? Are you going to refinance in year three? Or do you plan to sell, hold on to, what does all that look like? A lot of times too, we've had investors ask, hey, can I go visit the property? Sure. We want you to feel comfortable with it. If you're close enough to it, absolutely. Any information we can be providing them. Underwriting, that's probably the biggest question that we always are asked. Can I see the underwriting and can I do a deep dive into it? Do you have the most recent rent roll, the T12 and so forth? And a lot of people will actually underwrite the deal themselves and then come back to us and say, okay, here's what I did. And my numbers don't match your numbers, or my numbers do match your numbers. And what's interesting is there's so many different underwriting models out there that it can get a little confusing if you don't necessarily understand a particular underwriting model and so forth. But, really diving into the area, what's going on with the economy, investors really have to trust but verify, right? So if we host a webinar and we provide all of this information, it's great, right? And it can all sound wonderful, but they actually have to go verify some of this information on their own. They have to do their homework in order to feel comfortable. I would never want an investor just taking at face value anything that I told them. I want them to go actually do that same research and come up with, the same information that we presented. So that way they feel confident in giving their money to us. I mean, it's the same as if you were to invest in a particular stock. You're going to do the research on that company, what's going on with it, and so forth.
What are you most excited about this year?
This year?
Yeah.
I'm excited about doing more syndications. I'm excited that with this particular group, we've actually hired an investor relations individual. So I'm excited to hand off some of that role to somebody else. But I'm excited. I've got a couple of Airbnb opportunities that I'm looking at. So I'm hopeful that we're able to, or that I'm able to take those down, because those are separate from the syndications. And if all goes well with these two syndications, we've been told by the owners of each of these, like, we have more and we'd love to hand you more deals. And if they're anything like, some of these deals that we have going on, then I think we'd be in pretty good shape rounding out 2023.
Yeah, great. Let's move on to the final segment, what I call the final four.
Okay.
What do you think holds most passive investors back from hitting their personal next level, whatever that happens to be?
Passive investors from hitting their personal next level. You mean they've already invested and they're looking to go to the next level, or they can't go to the next level? I think sometimes it may be money. I think it's understanding, diversification in real estate and why real estate is such a good place to be putting your money. I think people sometimes, dip their toe in the water. They test the waters and they sort of wait to see what happens. And not every deal is going to be a 5-star deal, right? I mean, let's be honest, not every stock is a home run. So you have some good ones, you have some not so good ones, and you have to take the good with the bad and you hope that they balance each other out. I think sometimes people get a little skittish, like, oh my gosh, that deal went south, so therefore I never want to do this again. But real estate, I mean, it's been tried and true. It's the way so many millionaires, multimillionaires have made their money. And to me, I mean, I trust it more than I do the stock market.
Yeah. So. What are you passionate about outside of real estate?
Powerlifting.
Powerlifting?
Yes.
Your favorite exercise is what?
Well, I go back and forth. So powerlifting, there's 3 lifts: the bench press, the deadlift, and the back squat. So deadlifting used to be my favorite until I had a bit of a mental block with it. And then I gravitated towards the back squat because I started seeing all these wonderful results with my back squat. And I think it was because I had the mental block with my deadlift. Now I feel like I have a nice round sort of experience with each of them, like they're all like trending in the right direction. And I just recently competed in an event back in the end of February, as a matter of fact. I was in a new age and weight class, and I set national records in them. And so I qualified for an international powerlifting meet that's in October. So I'm looking forward to training for that. What I love about it, it keeps me accountable. 4 days a week, I'm in the gym. I report to a coach, and it keeps me in a good place of making sure that I'm maintaining some level of health and wellness. And at the same time, it's just a good way for me to channel some of the negative energy that enters into my life and channel it through the bar.
How did you get turned on to powerlifting?
So I owned a fitness studio for a while, and it was a group fitness studio. And I loved the group fitness aspect, but I wanted something a little bit more. And I thought, maybe I want to train for like a bodybuilding competition. And as I started researching that and kind of dabbling in it, I realized that, that's not what I want to do. I like lifting heavy, but I don't know what I can do to lift heavy. So I I kind of teetered between CrossFit and powerlifting. And so I started training with one coach and started seeing some results. And I was like, okay, I think this is more my thing. And then I ended up finding 5 years ago my current coach. I've been with him ever since. And once I started having some success with it, I was like, all right, this is my home. This is what I was meant to do.
Yeah, that's cool. What's your favorite book?
My favorite book. Oh boy, that is a really good question. Probably Think and Grow Rich. I just think it's the power of the mind. Whatever we think, whatever we put out there, it can be done. And I've seen that more often than not, especially as I've started really focusing my mental state, channeling it in a more positive direction. So I've seen the fruits of it. And I just recommended reading for anybody. I tried to get my daughter to read it. She's like, "Mom, what are you trying to do to me right now?" I'm like, "Honey, trust me. At one time in your life, maybe not at 19, but somewhere down the road, you will be reading this book." So,
what's your favorite way to make an impact in the community?
Giving back. For me, I want to be able to give back in so many different ways, right? And I have some goals, with real estate. However, I had struggled for 26 years with an eating disorder. And it was something that started when I was 16 years old. And fast forward 26 years later, crossed over to the other side of being in a better place physically, emotionally, mentally. And so I like to go around to high schools, and specifically all girl high schools, and talk to their health classes about my journey, through an eating disorder. And it's been super rewarding. I've gotten, letters from girls who are, same age, maybe older, maybe a little bit younger, thanking me for coming in and speaking, giving them hope that whatever they're struggling with, and we're talking about girls that are in, some of these high schools, high pressure high schools, their parents are pushing them. There's a lot of social pressures. You got social media where, when I was in the throes of my eating disorder, social media wasn't a thing. So I didn't see, what was going on all the time. I couldn't follow people who are in the midst of eating disorders and whatnot. And so for me to be able to give hope to young girls is really important, because I never want somebody going through the journey that I went through.
Yeah. For people who want to find you, they want to follow you, they want to connect with you, where should they go? What should they do?
Sure. You can go onto Instagram or on TikTok at Investing with Beth. You can follow me there, both places. You can also email me, beth@lifestyleequitiesgroup.com. Or give me a ring, 513-470-1078.
Wonderful. We'll make sure everything you just mentioned is going to be below in the show notes for everybody. Beth, I appreciate taking the time to connect and come on here. You've got an amazing journey through single families, in your construction business, and now into multifamilies, and really doing some very interesting things, assuming some debt and focused on cash flow. So, which I think is a great spot to be in today's environment. So I appreciate you taking the time to connect up and come on, Beth.
Yeah, well, thanks for having me.
You're so welcome. Thanks so much. We'll see you soon.
Bye-bye.
To our listeners, pat yourself on the back. You guys have made it to the end of the show, and most people never finish what they start. If you receive value from today's show, be sure to share it on LinkedIn, your Facebook page, or your social media platform of choice. Subscribe to never miss a valuable episode in the future. And if you found value in today's episode, give us a thumbs up with a positive review. If there's a particular topic you'd like to hear about, well, I want to hear from you. Shoot me a message on LinkedIn. The link to my profile is below in the show notes. You can connect with me there for more valuable content.